Canada Pension Alert. If you receive CPP or OAS, or you are planning to start collecting either one soon, there are changes happening right now that could affect the size of your next payment. Some of these changes are automatic increases, but others depend on your income, your tax return, and even when you choose to start collecting. Stay with me, because getting this wrong could genuinely cost you thousands of dollars over your retirement. Welcome back to Frank Canada Today, the channel that breaks down exactly what is happening with your pensions, your benefits, and your money here in Canada. Today we are covering the most important CPP and OAS changes you need to know before your next deposit lands. I am going to walk through how each benefit is calculated, what has already changed in 2026, and what you personally should be checking right now. Some of this is confirmed and already in effect, and some depends entirely on your own income level, so pay close attention to which parts apply to your situation. Let us get into it. First, let's talk about the Canada Pension Plan increase. CPP benefits are adjusted once a year, every January, based on the change in the Consumer Price Index. For 2026, that adjustment came out to 2%, which is lower than the increase Canadians saw the year before, when inflation was running much higher. As a result, the maximum monthly CPP retirement payment at age 65 rose to $1,507.65, up from $1,433 in 2025. Now here's the part that surprises a lot of people. Most Canadians do not actually receive the maximum amount. The average monthly CPP payment for new beneficiaries age 65 was around $803 as of late 2025, well below the maximum. Your own amount depends entirely on how much you contributed over your working years and for how long, so don't assume you will automatically get the headline maximum figure. Second, old age security works completely differently from CPP, and this trips a lot of people up. Instead of adjusting once a year, OAS is reviewed 4 times a year, in January, April, July, and October, based on short-term changes in the Consumer Price Index. For the July to September 2026 quarter, OAS rose by 1.2%, bringing the maximum monthly amount for seniors aged 65 to 74 up to roughly $751.97. Seniors aged 75 and older receive an automatically higher amount, since OAS payments increase by 10% once you turn 75. One important detail. Service Canada has confirmed that OAS payments will never be reduced even if inflation drops, so this benefit only ever moves upward or stays flat, never backward. Third, if your income is on the lower end, you need to know about the Guaranteed Income Supplement, or GIS. This is a separate, non-taxable benefit paid on top of OAS to low-income seniors, and for the third quarter of 2026, the maximum monthly GIS for a single senior is around $1,123. Here is the critical part. GIS is recalculated every single July based on your most recently filed tax return. That means if you do not file your taxes on time, your GIS payment can be delayed, reduced, or even paused entirely, regardless of how low your actual income is. If you or someone in your family relies on GIS, filing your tax return every year without delay is not optional. It directly protects this payment. Fourth, let's talk about the OAS clawback, officially called the OAS recovery tax, because this is where higher income retirees need to pay close attention. For the 2026 income year, the clawback threshold sits at $95,323 of net income. Once your net income crosses that line, the government recovers 15 cents of your OAS for every additional dollar you earn. For seniors aged 65 to 74, OAS is fully eliminated once net income reaches roughly $154,753. And for those 75 and older, that ceiling rises to about $160,696 because of the higher base amount. Things that count toward this calculation include
income, CPP payments, RRSP and RAF withdrawals, rental income, and taxable capital gains. If you are getting close to that threshold, strategies like income splitting with a spouse or smoothing out RAF withdrawals can help you keep more of your OAS. Fifth, timing matters more than most people realize. Both CPP and OAS allow you to delay when you start collecting, and both reward you for waiting. If you delay CPP past age 65, your payment increases for every month you wait, up to age 70, and that can add up to a 42% higher monthly payment for the rest of your life if you wait the full 5 years. OAS works similarly, increasing by 0.6% for every month you delay, up to a maximum increase of 36% if you wait until age 70. On the other hand, if you start CPP as early as age 60, your payment is permanently reduced. Whether delaying makes sense for you depends on your health, your other income sources, and how long you realistically expect to need these payments, so this is a personal decision, not a one-size-fits-all answer. Sixth, Keep an eye on your payment dates and how each benefit is deposited. CPP and OAS are administered separately, so even though Service Canada often pays them around the same time, you may see two separate deposits rather than one combined amount, and that is completely normal. CPP amounts stay fixed all year after the January adjustment, while OAS and GIS amounts can shift every quarter. If a payment does not appear in your account on the scheduled date, Service Canada recommends checking your banking details in your My Service Canada account first and waiting 5 to 10 business days if you receive a mailed check before reaching out for help. 7th, and this is the step most retirees skip, check your own numbers directly through your My Service Canada account rather than relying on the general figures you hear online. Your CPP amount depends on your personal contribution history. Your OAS amount depends
on your years of Canadian residency after age 18, and your GIS eligibility depends on your household income. The maximum figures we have talked about today are useful as a benchmark, but your actual payment could be quite different, so checking your personalized statement is the only way to know exactly what is coming into your account. So here is the quick recap. CPP rose 2.0% this January to a new maximum of $1,507.65. OAS increased 1.2% for the summer quarter. GIS reset every July based on your tax filing. The OAS clawback now starts at $95,323 of net income. Delaying either benefit can significantly boost your monthly payment. Payment dates and deposits are worth tracking closely, and checking your personal Service Canada account is the single most reliable way to know your true numbers. If this video helped you make sense of your pension, give it a thumbs up. Subscribe to Frank Canada today so you do not miss the next update. And let me know in the comments which of these 7 points matters most to your situation. I read every comment and I will keep bringing you the latest on your CPP, OAS, and every other benefit you rely on. Take care and take care of your pension.